Traders, today we had an interesting day, and in this video we're going to talk about how to identify high probability setups using price action rules. Now you guys can see I have the channels drawn on the chart, and the reason why I draw these channels on the chart because price action is never naked on a chart, it's always contained by some form of pattern, and these channels will help me to identify the direction of the market. Now we have a close outside of this bearish downtrend and price form a new extreme. This low is lower than this. This is telling me that this downtrend played out with a break and a new low. And the bigger pattern during the overnight session was bullish uptrend, and this bullish uptrend has yet to test its new extreme. There's a close outside, but bullish uptrend doesn't have a new extreme. For that reason, I'm going to use this information to predetermine my bias, because price can do anything. We can push to exponential moving average and reverse down. That can very well happen, but I have to play the probabilities, and the probability is that the price is going to retest the new extreme because it needs to test the new extreme according to trendline rules. I can see that the price is pushing above exponential moving average, which is confirming my initial bias, my initial analysis, which is good. So the way I can capitalize on reaching the new extreme is through a high probability setup, and a high probability setup is either a failed second entry short or a second entry long. I count from the lows for second entry short failure, and I count from highs for second entry long. So price created a new high, first entry long, failed and created second entry long. At the same time, I have a new low, first entry short, break higher, second entry short, failure. Price created a scalp, but you guys can see the spike in volatility because it is during the news and you cannot take entry during the news. So you have to be patient, you can get slippage, and it is not worth taking an entry. Not only market created new high, it is also pushing higher consistently. So this is telling me that the bias is stronger than I initially expected. I can see that there's a series of higher highs and higher lows. So I can try to identify a bigger channel. And how do I draw a bigger channel? The bigger channel is generally located from the first couple of swings. If I'm going to use these swings right here, we already have a multiple breaks in new extreme, so this is not great. I can see that if I draw price like this, I have nice confirmation here, and this is really fitting price nicely. So if I'm just going to copy it and see what I can get at the top, yeah, this seems pretty well. So this is the structure that I can work with. This is the bigger pattern, and right now I'm only thinking about buying. I'm not interested in selling. I cannot go long all the way up to here because I'm far away from the exponential moving average. So right now what I do as a trader, I wait for price to pull back to my key entry point if I want to take any entry long, okay? Price created a micro double top, which we reset the count, and I have a first entry long, pulling back, and I get a second attempt to go long. This is a high probability setup at the key entry point, but I'm drawing these short-term trend lines because I want to stay on the right side of the market. I'm not only locating the patterns for the with trend direction, also against the trend. So if I have a second entry long here, it's still inside this channel and I need to wait. However, notice what happened. Price pulled back, broke the channel, and right now is testing the new extreme. New extreme cannot be tested because EMA is the key entry point where buyers are stepping in and they're buying the market. So this is considered as an attempt for new extreme, and under bullish structure, it is good enough for me to go long. This is a great high-low confirmation setup of a two-legged pullback with plenty of room to this previous swing high. So high-low confirmed two-legged pullback, great high probability setup. However, this formed exactly around the open, which you would have to react really quick. My limit order didn't get filled. So this is a great textbook high probability setup. Structure is bullish. Now, after this higher low confirmed the bullish momentum, EMA kept holding price. You're using the EMA to tell you to confirm the overall bias. So you have the channel drawn. I have the EMA confirmation. So right now I still am thinking only long. The shorts will not even enter my decision-making process. I'm just basically waiting for a nice pullback. I only got a first entry. And notice what price is happening. I didn't have this channel yet. I'm just drawing this channel now once I see price eventually breaking higher. And this is important information that dictated today. I have what looks like an overshoot of the upper trend channel line. And notice how this channel looks. It has 3 confirmations of the bottom and 1, 2, 3, 4 touches of the highs. So there is no need for me to disregard this channel as invalid. I need to trust this channel if I'm following the price action rules, because there's a rule how to draw these channels. And if I want to create consistent results, I need to stick to those rules. So if I have an overshoot right here, I'm respecting the overshoot, and I'm a little bit hesitant to take a second entry long because price can break the channel or straight up reverse. Okay, the structure is very strong, so probably not reverse, but it can create a substantial pullback. For that reason, once price creates a new high and we have a first entry long, pullback, second entry long, same pattern right here, this would be great entry if there was no overshoot. Since there is an overshoot, I really cannot mark it as a high probability setup. And even then, another extremely tempting entry to take, failed second entry short, because you know that short's getting trapped, going short directly into EMA in the strong bullish structure. But you're focusing on the overshoot. Only after this swing right here, you're able to reassess, okay, this is the first overshoot and this is the second. So once price keeps pushing higher, there's probably no overshoot and the channel is a little bit wider. You can have a spike and a channel form right here because you can identify first few swings, combine it with the structure like this, and this can give you information about the structure. But this is all hindsight. When you're watching this live, I don't think you can take the second entry long unless you're really experienced, that you identify this channel early and you know that the channel may be a little bit higher. All right. So once price is pushing higher, the bias is still clear. It's still clear. Right now we're pushing higher. I'm not even thinking about selling. At this point on, I was just, bored watching market go because there's just no pullback to the EMA. But this is what I have to do. I just have to wait. I cannot take these first entries. I need to take a high probability setup to like a pullback at the key entry point. So I was just watching this without any real opportunity to enter. And notice how this channel kept moving higher and it looked like if it overshooting. This would really mess with my mind today because this looked really overbought and this is really unusual. Generally, you will get stronger corrections. So the channel eventually ended up being correct. It was just a little bit wider. So this is a little bit hard to trust this live. But once you have this channel right now, you're trusting this channel. And notice what you have, new high, you only get the first entry long. You have a shortened downtrend with the break and new low, which is great. This is telling you that the downtrend is over. Okay, this is just the first entry long. This is a hidden second entry long because price didn't trigger above the first entry long. If you go on a smaller time frame, there's a visible second entry long. But I don't want to mark hidden second entries because they're very contextual. And under these circumstances, you have two key entry points and you have a strong bullish structure. The next time you will take a hidden entry, the structure will be just slightly different and you will get trapped and you will be wondering why. So this is not a bad entry by any means because the structure is bullish. You got two key entry points. Great bullish reversal bar. However, I prefer to be waiting for legit high probability setup. But if you experience here, you can put the pieces of the puzzle together and understand that you're probably going to push higher here because you zoom out, you remind yourself about the structure, and the bias is still very bullish. Now, price is right now going very sideways. You're not at the key entry point, and price is pulling back lower. Notice what we have. We form a double bottom. We have two-legged pullback, first entry long, second entry long. Not only that, we have a visual large two-legged pullback, first leg, pullback, second leg, microsecond leg. This uptrend spike in a channel just now has a break. So according to rules, it needs to get new extreme. So this is a great bullish bar, two-legged pullback under the right context, high probability setup. Price form a tempting higher low, but you're right now stacked in this consolidation, and also you have micro congestion here. So this is also the little failed breakout of this congestion, and you want to fade this breakout. Price form a failed second entry short, which was very tempting, but still this is a little bit rangy. I marked this setup. This would have been a great entry had it ticked lower because this would have been a continuation of a failed second entry short and a second entry long at the same time. But it's still just the first entry long and market continue pushing higher. So once again, you can be taking a chance on these entries because trading is about probabilities. Probabilities are stacked on your side that you're probably going to push higher. Just the safer entry are once the price is pulling back, not stacked like this. Now, price created a break, multiple legs to a new extreme of this spike and a channel. So if you're following the trend line rules, you are aware that after breaking a new high, you're going to most likely get correction or possible reversal. Once the trend is this strong, I'm not even thinking about reversals to be honest. I'm just basically letting the corrections play out. Any bearish downtrend is considered as a correction, and eventually I expect for it to push back above the EMA under such a strong structure like this. Price is pushing lower, break new low, new high, first entry long, pull back, second entry long. But notice what is wrong with this trade. The signal bar is beautiful. I guarantee This probably trapped a lot of traders because the signal bar is looking gorgeous. But by this time you get 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, let's say 10 bars stacked next to each other. EMA is getting in the middle of these bars, is getting really flat. And you already have break multiplex to an extreme. So this is not a great entry to take. However, if you were going to take a chance on an entry on a day like this, if it's a two-legged pullback at the key entry point, I can definitely see why. But the EMA is really flat, and this is what EMA is for. It's telling you that the structure is a little bit too stacked, it's a little bit too congested. And you guys can see most breakouts will fail, so price broke higher, didn't manage to reach the scalp, and eventually pull back lower. Now I can see that I have a price working lower, and when I'm watching this, I have a first leg, I have a second leg, and notice I haven't taken a single trade at this point on. I missed this right here because my limit order didn't get filled. The overshoot messed with my analysis, so I wasn't able to capitalize on these trades working to the upside. So I was paralyzed by the overshoot, and now right now the market is pulling back. I'm looking for this downtrend to be over, so I'm looking for a chance to get in and to go long again. So I have a first leg, pull back, second leg. So right now I'm expecting for price to push back above EMA. Okay, we're pushing above EMA. I have a high low, so I want to go long above this, but we don't get trigger and price is pushing lower. Okay, so this is telling me probably that there's more steam in this bearish downtrend. So I'm just going to widen this a little bit like this. And this now makes sense. We have a break, we're working lower. I'm going to extend the double bottom into triple bottom and see if price is going to react. Price can push lower, completely disregard this, but I can see that the price is holding here nicely and it's reacting. I have a break, new low form, high low, and price is pushing above EMA. This is great confirmation of the overall momentum. Remember, every bearish downtrend under such a strong bullish structure, you're treating it as a correction that will play out, and then you just wait for price to push above EMA. So if price is pushing above EMA, what's going to be a high probability setup, felt second entry short. When I was watching this and I saw a bounce right here, I curved my trend line a little bit to get the touch right here. You guys can see I have a little bit of break here, which you don't want to have, but if I just curve it a little bit here to get the confirmation here, it's not too big of a deal. So you guys can see I'm using this to get the confirmation to trust right now the second entry short, and I have a failed second entry short above EMA. EMA keeps holding price, trend line keeps holding price, and what a fantastic trade. This was my first and only trade for today. Downtrend played out with the breaking extreme. And notice you have to keep these bearish downtrends tight as possible. Notice that at first how I'm drawing them really tight, and if I'm forced to make them wider, I will, but I'm not going to draw them wide like this. If you draw the downtrend like this under such a strong bullish structure, notice what can happen. You can look at it as I'm not going to go long directly into this downtrend. So this can give you an extra variable that will force you from taking this trade. But no, you want to get rid of these downtrends as quickly as possible. They're just the corrections, and you want to be safe to look for longs. So just, if you make it wider, yes, but don't go too overboard making it extra wide, because it will cloud your judgment and you will not be able to take these long entries. So you're always leaning more towards with trend entries, and trend is up right now. And notice how high probability setups are just variations of the two-legged pullbacks or high lows. So this is a pretty simple price action. Right now we're watching the market go higher. We're expecting to get a second entry long at the EMA. Unfortunately, price already created a break and a new extreme, so we don't get a chance to go long in a second entry long. We have a first entry long only, count reset, first entry long, second entry long. But right now it's getting a wedge formation. Notice how resistance is getting close, trend line is getting close, and this is not a safe entry just yet. However, then price form a high low, confirm the two-legged pullback. If you're unsure about the two-legged pullback given the structure, high low is the extra confirmation from the market to tell you, okay, now you gotta go long and now it's safe. Notice what happened. When I'm watching this, I don't have a confirmation of the channel. So it's still looking a little bit too wedgy, but what it ended up being, and what you can identify the better channel, if you can see that you're not touching perfectly here and you're not touching perfectly here. So this is telling you, okay, isn't there a trend line here? What you can do is use these first two swings and connect it with the trend line like this. So you have perfect fit here, and perfect fit here. And if you find this channel, this now confirms the second entry long, and the higher low now is really powerful. So as a trader, you sometimes will find a channel that you will set it and forget it, but as the price action is falling in front of you, you have to keep reassessing whether your trend line is drawn correct, because there are probably bigger patterns unfolding. So make sure to keep redrawing the channels. You never want to be stuck to just one channel, but to make sure you get the best fit possible, it's completely okay to keep redrawing channels, keep deleting them. Every trader does it, and you're not probably going to spot the best setup, the best pattern at the very first try. Sometimes you will, but sometimes it's going to require a little bit more work. And this is exactly what this pattern required, a little bit more work. Now, at this point on, I have a bunch of first entries, but I can see that there's an empty space here, and price is leaning on this trend line. It's looking like it's going to tilt over. So I don't want to take any first entry longs here, and eventually price tilted over. But at the same time, bias is bullish. I expect new high because this is the first break of this bigger pattern. So I'm treating these corrections as a corrections. Break, first leg to a new extreme. Okay, there's no push above EMA, another leg down. Okay, so I'm being patient. Strong push above EMA, finally confirming the bullish momentum that we may get. New extreme. Was going to be a high probability setup. This or this. So I have a first entry short, pullback, second entry short failure, and I have a new high, first entry long, pullback, second entry long. This would have been a great entry, and I was ready to go long here, but the signal bar is big with the stim. More importantly, price didn't break higher. It stalled on this bearish bar, and I canceled order, scratched the idea, and I just let it go higher. Now you can take a failed second entry short on engulfing, disregarding the signal bar. That is a way how you can treat the failures, because on failures, signal bars don't matter as much. But given the fact that structure was so slow at this point on, it doesn't look like that watching this in hindsight, hour and 20 minutes, but we basically didn't move anywhere. We just created a sideways movement. So this was a very slow structure, and under such a slow structure, I'm not trusting engulfing as much. But you guys can see from structure perspective, this is a great entry. Double top, indicating, okay, we might not get a new extreme. We may only get double top. First entry long, second entry long failure. Below EMA, downtrend needs new low. Downtrend played out with the break in new extreme. Triple bottom. Probably tempting to go both long and short, but you have multiple bars stacked. You have to be patient here. Price is pushing higher. Overall bias right now is getting confirmed. Okay, it's still bullish. This minor support is holding. We're back above the EMA. We keep working higher. So we're probably looking for long entries. However, there is no chance to get a good second entry long or failed second entry short. A market just continued pushing higher into close, and there was no good entry because now it's already way too late. So today was a little bit difficult because of the overshoot here. It ended up being way too steep, spike in a channel. There were a couple of these good setups. You guys can see two-legged pullback at the key entry point. That is the magic. Failed second entry short is amazing, and high lows are working, confirming the two-legged pullbacks, or high low can even confirm the failed second entry short. So remember, treating these bearish downtrends as corrections. Don't try to make it too wide, and you will be tweaking the channels as the price action is unfolding, because there are bigger patterns unfolding, and you don't even have idea what the bigger pattern is when you're playing the shortened structure, because once you're playing the structure like this, you have not confirmed the bigger pattern just yet. You only have an idea that there may be a bigger pattern like this. So I hope the video was helpful, and I'm going to see you guys in the next one. Take care, everybody.